Good evening, everybody. We're going to get going in a couple of minutes. Thank you for your patience. Good evening, everybody. We're going to get going in a minute or two. Just for those that might be on the live stream on YouTube, I can't see the chat. So if you want to join us in the webinar, I'll put a link in there in the chat. Just click on the link and register. I'll just give you a minute to do that if you want to do that. Other than that, if you want to stay on YouTube, that's fine, but I just can't see the chat. So I'm going to get going in about a minute's time. Just waiting for a few more people to come in. Thank you. Okay, good evening, everybody. Welcome to Stephen's ACY Securities webinar. My name is Duncan Cooper. So tonight's Forex Trading Live Market Analysis. So before we get into it, if you can read through the risk disclaimer. Any questions, you can put them into the question and answer box. I've got the chat box open too. So I'll just read through the risk disclaimer. So I'm going to be going through some analysis, maybe some trade setups, some monitoring, watching. Everybody's responsible for their own trading decisions. So I don't know your personal objectives and circumstances, so you're responsible for your actions. So that's what the risk disclaimer is there for. Just read through it. And I can see maybe a couple of new names on there tonight. So if you're new to the webinars, welcome. All right, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time trader. Been Forex trading now for more than 15 years, mentoring clients for more than 10. If you want to contact me, my email is on screen. Just shoot me an email to duncan.cooper@acy.com. If you want to connect with me in the week at our website, acy.com, Market News tab, on our YouTube channel, ACY Securities Australia. And you can connect with me as well personally on Twitter or LinkedIn if you want to connect. As well through the week, if you want to get access to our Telegram channel, live interactive trading feed where I'm posting analysis, then just contact Nathan Bray. He will organize that for you. As well, if you want to get access to my chart layouts, as you can see up here, you'll see my charts in a moment when I do some analysis. If you want to get access to my charts, the layouts and indicators, just simply contact Nathan. So I'll put his details in the chat right now. Just bear with me. All right, so that's going in the chat. That's Nathan's contact details. To get access to the Telegram channel or get access to my chart layouts. All right, so let's not hold up anymore. Let's get into, first of all, we'll have a quick look at the news. And we've had all this news come out earlier in the day, about an hour or two ago. Would it be almost 2 hours for the Euro news, almost half an hour since the pound news. Got the US flash services PMI coming out at 11:45, and then nothing much more until later into Thursday of any note. All right. So let's get into the charts now. We've been having a heavy sell-off. I just want to click through my charts and just see what's going on. We've been having a heavy sell-off over the last week. Going with the trend. Hopefully you've made some money. Some pairs at the moment though may be a little bit. Got a message coming in. Cameron, what is the Jackson Hole Symposium? Well, you could go and Google it. That'll tell you what it is, but it's, well, I'd have to refresh my memory. It has the possibility of affecting the market. It's some of the world leaders coming together, I believe, from memory, but if you just go and Google it or click, if you go to, let's go and have a look. If you click on Jackson Hole Symposium, click on the folder here. I'm just reading this here. It's an economic policy symposium held in Jackson Hole, Wyoming. It's attended by central bankers, finance ministers, academics, and financial market participants from around the world. Okay. So if you want to know more, just go and Google it or read in here. All right. So potentially, you know, somebody of importance can say something there that might stir the market up. All right. Very difficult to know when anything's going to get said that's important from that. So I don't tend to worry too much. All right. So there we go. All right. So as I was saying, we've been having a heavy sell-off across the pairs to the US dollar. Just having a look at the moment, see what's going on. Been having a bit of an upward move, like on the pound dollar. Euro dollar's moved a little bit since its news items. Hasn't changed any trends, but what I might do is start with just the dollar index, and I've got a few pairs that I'm monitoring. Dollar index at the moment, this is a day chart. It's coming up from approximate 62% retracement here on the weekly. Coming up to retest the monthly resistance levels. Got the monthly chart in a moment. Coming up to retest the monthly resistance levels that we withdrew down from last month. Okay. So no trend change here at all. We've had a 3 or 4 week decline to a 62% retracement. We're moving up to test the high that we came from. Now, of course, we could hold there and fail, but nothing's screaming out to me that we're going to fail up there at the moment. So we can monitor, obviously, if we start to see some structure form here that might cause us to think we're getting a reversal, well, we can monitor that. But at the moment, US dollar is getting stronger pairs to the US dollar getting weaker, okay? That's the general theme. And on the S&P 500, we're starting to have a sell-off. So the normal kind of status quo, US dollar getting stronger, stock market getting weaker, that kind of linked correlation. We retraced 62% here on the S&P 500 from this monthly range that I've got the fib drawn in, okay? Held at monthly resistance here at 42.68. So this may well be starting to move down, putting its next leg down potentially. Okay, still got higher tops and bottoms just on this pairs or instrument. So if we get a lower top forming, it's going to look more bearish. But MACD's crossed down, possibly a lower top, forming here on the monthly. We'll just have to monitor that. But US dollar strength coming in, stock market weakness coming in. Okay. All right. So pairs that I'm keenly monitoring at the moment. I did analysis today on the euro yen. I'm going to go to my other charts to show you this. For those that have been in my webinars that know about the weekly candle range, head and shoulder pattern, draw the fib across here, last week's candle range. So last week's candle, okay, I'm just going to draw it in as that block. Low to high fib drawn, we pull back almost to the 79% level. And what I'm also noticing is, and I know if you're a purist, you probably won't say this is a head and shoulder pattern, but or an inverted head and shoulder. But for me, there's a potential bit of a left shoulder there. There's your head. And are we forming potentially the right shoulder here. All right. Ultimately, what I'm looking at is this is the weekly candle, and I've been looking for a pullback within that weekly range. We've gotten a fraction short of the 79. We're above the 62. We're back above this 4-hour support area. So we kind of false broke that. Are we now going to be moving up over the course of time to break above last week's high? And in my analysis today, I was looking for the potential for a break above the 13800, which is 137.96 is last week's high. A break above 13800 to start to confirm that the weekly trend's turning up, the day trend's turning up. But of course, if you can get in earlier before the turn and be in, if you can get in long in this area ahead of that break so that we move up, all credit to you. All right, so we've got a nice 4-hour candle rejection down there. I'm going to actually go through a webinar on how to trade 4-hour candles, but simply if we have bottomed here, a very simple entry technique would simply trade the break at the high of the rejection candle for your entry. Stop below the low. Okay, as long as that rejection is true and it's formed the bottom there, you won't be wrong. And then you're obviously looking for price action to move up over time and get that line to be straight, which it doesn't want to do. All right, so we've got a significant rejection in an area where we might anticipate support. So if we break the rejection candle, that could be a trigger to get in, or at least a trigger to start to think about how you're going to get in. All right, so I'm anticipating we've moved up last week. We're pulling back inside last week's candle. We're going to be moving up potentially. All right, like so. All right, other pair I'm watching at the moment quite closely. I put this in the Telegram today, the Aussie dollar, and it's not giving up nicely because I've been in this pair twice today. Is earlier in the day. Let's just go to the day chart first of all. I know I've got lots of lines on here, but hopefully you can see on my day chart here, there's a clear area of support here. With support when we moved up, now potentially the trend is down here on the daily now. We've broken below this low, but we're kind of false breaking it. We're having a positive candle yesterday. Today we're positive. Is this forming support here to move back up? Is this a double bottom? I know it's a bit of a false break bottom, but clearly support is coming in there. So earlier in the day, I posted in Telegram this 4-hour uptrend. I was trading. I got in close to the 79% level. Well, I say close. I got in at 60 at 82, and it went up to almost the figure, and I got to break even. Then it stopped me out. Then I was monitoring down here. I managed to get in once more. So what I'm seeing here is 4-hour trend now is a bit mixed to slightly down, but what I am seeing is that yesterday, this is last week's low as well. We're rejecting last week's low. We're rejecting this day support level. We rejected it once, twice, 3 times. So clearly support is down there. Just a question of, is support going to hold longer term, or is this just a short-term battle between the buyers and the sellers? Okay, so you need to make your own decision as to whether you think this could be a good area of support to move up. What I'm noticing is, the weekly trend potentially is putting in a lower top here. All right, but nothing ever goes down straight all day long. So on the day chart, what I'm noticing is potentially this could be a left shoulder. This could be a head. And if we do, have a rally, there's potentially the opportunity to make money trading up for then they'll look at this area to the right-hand side for a right shoulder. All right, now I don't know whether that's going to come together. We might just be seeing a couple of positive days at the moment on support before we break below. So you need to make your own decision as to whether you want to trade up from here. But if we do start to trade up and you don't get on board, then, well, look for the possibility of a left shoulder, head, or right shoulder to form at the 70.47 level. Okay, so we can monitor that through the week. All right, at the moment, as I said, I've been watching support here for a possibility to move up. And back to my 4-hour chart, I have my fib drawn here. Didn't that price moving back down intraday today didn't break the fib structure. We didn't break the low here, just got messy. Higher bottom, lower top. Broke and we spiked through that bottom. All right. So there's still the potential that this is going to hold here at the 79% level to move up. All right. What I also see here is another one of those 4-hour rejection candles, which could be starting to confirm that, yes, we're getting good support down there now. And if we do break above that candle high, that could start to obviously confirm in your mind that you need to get looking to the long side if you want to trade this pair over the next couple of days. All right. I mean, it'd be great if you could trade it here for a buy up to the right corner of the shoulder and then trade it down if that becomes a shoulder. All right. So still a question though, whether, you know, we are getting support there, but you need to make your decision. There is some support forming at the moment. Is it going to be more than intraday support for a move up? All right. All right, I'm going to move back to my other charts. Aussie yen. And this pair at the moment, it's rather range bound. All right. Potentially, last week we were looking at this 79% fib retracement. Were we failing at this level to move down? We're still holding there. Are we failing there to move down? Since we've been looking at it though last week, what I've started to notice is that we are forming a higher bottom. So we could still fail here, but higher bottom, we could be moving up to test the resistance areas up here. If you go to the monthly chart, look at the monthly candle. All right, it's very positive. You know, we haven't got that many days left for the month. If nothing really changes over the next week, we're going to have a very positive candle for the month, which kind of, to me, starts to suggest that we may be moving up and through over time. All right. So at the moment, it's gotten very quiet and it's forming a higher bottom there. So structurally on the 4-hour chart, it is in an uptrend, bit of a rejection down here. It's very range bound. I'm not trading it at the moment. I was in it last week. I managed to get out with about 20 pips of profit. I was short here, traded down. I was waiting to see whether it would come up and move further down, and it didn't. So I got out with some profit, but very little. And you can see it's very range bound. So I'm just leaving it alone until I can see a bit of cleaner price structure. I mean, it could break down to the downside. However, that monthly candle is looking rather positive, and the day chart's giving you a higher bottom there. So I don't want to be buying too close into resistance. So I'm just looking for a favored approach. And, you know, a favored approach, if you look at the 15-minute chart from yesterday, start of the day, we got support down here at 9,400 to move up. So if we got back down to 94 and it started to hold once more, 94 could be a good level to be a buyer at for the opportunity for price to trade up to test resistance back up here. All right, you can monitor that. All right, so that's what I'm looking at the Aussie yen. It's a bit difficult at the moment, rather range bound. All right, cover the Aussie dollar. And we covered the euro yen. So those rejection candles we're seeing on the Aussie dollar and the euro yen, we haven't broken above the tops of those yet. So still deciding. Euro dollar. Now, this has been a very good pair to trade. 2 or 3 weeks ago, well, last Friday, 10 days, because I was in the trade for 10 days. I sold it up here at 103.40 at monthly resistance. Took it off on Friday. And yes, it's moved down another 100 pips or so, which is annoying, but I had good profit, and I thought, well, if I've got good profit, I don't want to be sitting on good profit and this thing moved back up. So I took my profit. Now we've moved down, broken below 99.52, which is weekly support here. And 99.04, if you go back in time, is another level of weekly support from way back in time. So the problem with this pair at the moment is the best place to sell it was up here. This is where people are starting to take their profits, looking for the potential for a reversal back up, or at least a 1 or 2 day reversal maybe before another move down. So it's not in the best place. If you're looking at your fib tool, you'll understand how the fib tool works. We've moved down, we've rallied 62%. We're beyond the 0 level. There's the 127 at 97.73. So maybe there's potentially another 160 pips if price wants to get down there, but that's just a measurement tool. All right. So as well, we're contending with, can we hold below parity? So at the moment, I'm not doing anything. You could, if you wanted to look at it intraday. We are holding below 99.52 weekly resistance now, or holding below support. It's wanting to be resistance, so you could look for the potential to trade down from 99.52 if it wants to fail there. Personally, and I put this in the Telegram, but things have changed a little bit since. There's a 4-hour lower top. Draw a fib down to the lowest points. Look for a rally, which will mean we'll probably get back above the broken monthly support, but that's fine. Looking at this 4-hour range, parities here, 79% retracements at 100.15. So parity the one number, 1.0000 up to, say, the 79% fib of that 4-hour movement down. That would be a good level to look for an opportunity to sell intraday if it gives a rally. I'm not really interested in selling this too low down now in the move. I would be actually a lot happier if price was to have 1 or 2 good days up, back up to like 100.96. That's daily resistance, and 101.18, which is monthly resistance. A nice corrective move so that the market's now not too oversold for an opportunity to trade down. All right. Where it is for me at the moment, it's too low down. I'm getting the feeling that I'm selling too close to the bottom. Okay. So whether or not price will give me that is another thing. I waited for a good 2.5, maybe 3 weeks or more through here for price to come up to 103.40 to sell. I'm happy to wait a week for this to come up to there to sell. Okay. This for me is too far down. So you make your own decisions, obviously. Intraday 100 or the 100 level there. Okay. Could offer good resistance intraday. You can monitor that level, but I'd much prefer higher up, more like the 100 level. All right, pound yen at the moment, it's a bit of a dog. Day chart here held between daily resistance and weekly support down here. In actual fact, at the moment, it's getting more support from here. 161.10. It's not great. So I'm leaving that pair alone at the moment until we can see some nicer price action. All right. There's other pairs that have been euro dollar, pound dollar's been performing great. Aussie dollar's been performing great. New Zealand dollar's been performing great. So why spend your time investing risk capital in something that's not performing great at the moment? Just look at something it is. It will perform great at some point. It's just not performing great right now. All right, pound dollar. So very similar to the euro dollar, we've moved down. We had almost a 62% rally, put in a lower top on the weekly. This is the weekly look. Down, rally, lower top, moving down to a fresh low. Now we are at, if I go to the monthly chart, got a few lines on here, but you can go to your monthly chart to do the investigation. We're at significant monthly support low areas here. All right. Significant low levels on the pound dollar. There will be some buying going on down here purely because we're at significant historical low levels. All right. So that's why when I'm talking on the euro dollar, I'm not that keen about selling it too low down. And it's the same frame of mind for me on the pound dollar. I am not that keen selling it so low down. I traded very similar like I did on the euro dollar. I got short up here. I think it was 122.29. I sold it. Took it off on Friday for about 400 pips. And yes, it's moved down another 100, which is annoying. But, you know, I think I was up 400 pips on the pound dollar. I was up 300 pips on the euro dollar. And I was up just over 200 pips on the Aussie on Friday. So I thought that's what, 900 pips. I thought that's good going over a course of 10 days. So I took all my trades off. Now they've moved down a fraction more, euro dollar and pound dollar a bit more. But again, this is very much getting into lower stretches of the fib tool. 127 extensions down at 115.15. There's a major monthly low. If you go to your monthly chart, you can go and investigate at 1645, 116.45. So we're getting into the area where buyers will be wanting to buy. All right, because it's historically cheap. So, you know, the overall US dollar strength that we're seeing may well maintain itself for the next 6 months or more, who knows. But you always have to look at getting in at the best spots, like, you know, this, where I showed you how to get in here at the 79% retracement level, close to the 62% level for the move down, getting in where the rallies finish. So at the moment, you know, a good rally, we've got weekly broken support here at 119.33. We've got daily broken support here at 118.90. If price can rally to those levels or all the way up to this day's support level that got broken at 120.03, 120, that's got a nice round number to it. You know, if price getting back up to 120.100, we haven't looked back since we broke that level. So if we get a nice rally back up, then, you know, these are the areas I'm going to be watching to sell down from 120.100. I'll be watching 119.33 and 118.90. All right. The deeper the rally, the better for me. Now, you might say, well, if it's going to move up that way, should I trade up that way? That's entirely up to you. The overall trends are down. Okay. So any movement up is counter trend. Currently, the 4-hour trend here is still down. Notably, though, this 4-hour MACD is crossing up. So we do have a nice rejection candle. So a break of that rejection candle is probably going to start to confirm at least some upward pressure. Then you can start to consider, what do you want to do? In fact, we have traded above that rejection candle, but we're moving fractionally down at the moment. So trading above that swing top high is most definitely going to change the 4-hour structure. Then you can start to think about how can you construct a trade to get long, or if you want to go counter trend. All right. There's also the other thing that we can consider on the euro dollar and the pound dollar. And we'll talk about it on the pound dollar, and you can just put it into practice on the euro dollar. And we can discuss it tomorrow when we talk about, if you come to tomorrow's webinars, all about double tops and double bottoms. There's always the possibility that we could have a serious rejection here at support, and this could be a double bottom. All right. But long-term trend is down. So I'm less convinced we're going to form a double bottom here, but it is worth watching to see what happens down here. We're at historical low points down here. So at the moment, if the 4-hour structure changes, so let's say we move up to a higher top, like the Aussie did today, earlier in the day, and then we pull back and we want to hold on supports, then I might get excited about, you know, looking to maybe trade to the long side. Okay. One of my colleagues has gotten long and pretty much gone long at support here. He's trying to trade it up to the 120.100 level, but whether or not he's being a bit too cheeky, a bit too adventurous, time will tell. Because the 4-hour structure there is still down. If the 4-hour structure starts to look rock solid, maybe there's an opportunity to trade up from 117.60. At the moment, we're trading at 117.58, so we're fractionally below there. But MACD's crossing up, so over the next 24 hours, something might form there that you like the look of. You know, I might see something that I like the look of there as well. but I'm very mindful that the trend is down. So overall, longer term, I'm looking for an opportunity to sell down from a level of resistance. New Zealand yen, it's going to go to the monthly charts. Like the Aussie yen, as well like on the Euro yen, if you go to your Euro yen monthly chart, you've got a positive monthly candle there. Higher top, higher bottom, higher top, another higher bottom here. Are we putting in another higher bottom here to move up and through eventually? We are holding at this longer term 79% level on the major range here. And there's lots of weekly resistance that's been forming in that area. But, you know, perhaps because of the carry trade scenario with interest rates rising on the pairs quoted on the left-hand side. So New Zealand's raising their interest rates aggressively. The yen side isn't. You know, sooner or later, this may well break north with the carry trade. Okay. So at the moment, it is forming a base of support here. I don't like it. It's just sitting in the middle of what is support and resistance, you know. So it doesn't excite me, like the Aussie yen at the moment. It doesn't excite me. It's not giving me structure that I like. It's sitting in the middle of a range. All right. If I can start to see some structure that I like, I'll look to trade it. If it comes up to resistance and shows me a clear sign it's failing, I'll look to sell it down, even though I've just told you about a monthly strong candle. But if a resistance wants to hold, then there might be an opportunity to trade down. You know, if we come down to support, 82.96, there's the potential then for maybe a left shoulder, inverted head, right shoulder to form. Okay, so we covered that pattern a few weeks ago. So look for something that's going to tell you where the best opportunity to trade is. Sitting in the middle of the range is not the best opportunity. Trading down from the range top to the bottom of the range, or if it comes down to the bottom of the range to trade up, is your opportunities there. Okay. New Zealand dollar. Now, much like the Aussie dollar, we've candlestick looks very similar here on the weekly. Lower top, lower bottom, lower top. Both on the Aussie and the New Zealand dollar, this weekly MACD's crossed up. So that's the one little thing in the back of my mind that's saying to me, you know, are we going to be moving down further, or is the area of support that we're at going to hold? So like I was discussing on the Aussie, let's just go back to the Aussie to refresh. Daily chart here. See daily chart support here. Looks very similar to New Zealand dollar support here. And we've got monthly support at 62, well, monthly, what was support because we were below it, 62.04. And we've got, so 62.04, we've got daily support down here at 61.91. So New Zealand looks fractionally weaker than the Aussie dollar because the New Zealand's actually sitting below the supports lines. So it's kind of going up and dealing off them to move down, whereas the Aussie dollar isn't. It's kind of sitting above. So there's a fraction of a difference. But you know, this has had 1, 2, 3, 4, 5, 6 negative days. Usually after that, we'll have some form of a rally. So even if we just get a rally, very much like I was saying on the Aussie dollar, could this, if we rally up, rallying up for 2 or 3 days won't change the downtrend here. But you could get set to look for the potential of left shoulder, head, rallying up to form a right shoulder. All right. That might not do that, but don't complain to me if it gets up there and then turns around and you didn't do anything. All right, so the 62% sits perfectly on the left shoulder area. So whether or not that comes together, who knows? But it's certainly something to monitor. Now, if you don't think it's going to have a rally, and you just think this is just going to continue to sell off, then what you'll be noticing on the 50-minute chart is monthly support, which was at 62.04 yesterday, became resistance through here. And day support at 61.91 today is holding. So maybe we're not going to go through those areas and move up to put in, say, a right shoulder kind of setup. Maybe we're just failing here just to keep moving down. All right. For MACD's crossing up, we are getting some rejection down here. It's just a question of, are we going to get a relief rally or not? Okay. This isn't an area where I want to be selling because for me, it's too low down. Okay. And if it just moves down 200 pips over the next 2 days, I'll just miss out because it's had a massive run down for 6 or 7 days. To me, it needs a correction. So I'm going to wait for a correction. But of course, you can look to engage however you want. We are at the moment managing to hold below now monthly support, what that was, and day support that was intraday over the last 2 days. All right. We do, just refreshing my memory, we do have some US news obviously coming out at 11:45 p.m. So if that's US dollar negative, then of course we could see a pop up over the next few days to put in those right shoulders. So we'll just have to wait and see what comes. Right. And one of the things I want to really, get home to you guys is it's great if we can trade every day. All right. I mean, I've traded twice today on the Aussie without great success, stopped out break even once, but the trades for me this month that have made me the most profit, I had to wait quite a while for them to set up, and they were on the euro dollar, waiting for price to come up to 103.40. Okay, on the Aussie dollar, waiting for price to come up and fail up here. I was looking at this resistance level, waiting for price to get up to that level, selling up there, and waiting on the pound dollar for price to fail. For those people that are new tonight, I was looking at this 79% retracement up here, failing at last month's high, and I had to wait for that area to form a structure and something that I liked. All right, I had to wait more than a few days for that all to come together. Just sitting around waiting. All right, that's what trading is all about half the time, sitting around waiting. Okay, now if you want to trade every day, great, drop down to those lower time frames, but you're going to make more pips waiting for the key areas for price to get to and then turn around and move down. Hopefully you can see that. All right, let's go to the dollar Canadian. Now, back to my other charts. Here we go. Been looking for this 79% retracement. Obviously, it hasn't got there. And ultimately, it got some support in between 62.79, and it's pushed up with that US dollar strength. Notably, where is it coming up to now? 130.76. So if you trade this pair, be very aware of this weekly resistance level at 130.76. For the best part of a year, this is May. I think this is May 20. Oh, I am telling a lie. That's only this year. That's since May. Yeah, May 2022. We form that area here. All right, we haven't wanted to get above. This is the weekly look. We keep holding there. We had a false break. We're coming up. Now, this is either going to move through or it's going to fail there. If it fails there, potentially, this could be the inverse look of what's happening on the Aussie dollar, where the Aussie dollar is getting support. This could get resistance to come up and put in a lower top on the weekly. All right, so if we don't move through there, we could be starting to form that kind of structure on the weekly chart. All right, so if you're long this pair, wherever you may have gotten in, you really need to watch 130.76. That's key resistance. If you'd like to be trading this pair intraday, look at 130.76 for failure, possibly to trade down. All right. Now, we have moved above what was weekly resistance at 129.01 and monthly resistance from that top over here, 129.63. The pullback that we might get right now may only be to monthly support, 129.63. So there might be an opportunity to be a buyer there intraday to trade back up for the break of that area. All right, so structurally it's in an uptrend still, but if it keeps failing at 130.76, you know, like it has been doing before, you know, it's probably going to move down. So if you want to get long, don't get long too close to 130.76, okay? And Slav, you're asking me thoughts about dollar yen. I'll get there in a moment. So let's go and have a look at that pair now. All right, dollar yen day chart. So you're saying a double top? Well, you could say that's a double top, but that's not the final top. If I was looking for a double top on this pair, it would be looking at that top, because this is within the move down. It's not a final top. I mean, we could form a double top there, but if I was like looking for a double top, it would be at this top at the top. So at the moment, what we're seeing is a little bit of hesitation at that top for sure. But structurally at the moment, this is in a very strong trend in terms of how many days we're having up. And covered this before. We've had a weekly pullback to weekly support, 62% fib retracement. All things being equal, we could be moving up beyond the high. 141.53 is next monthly resistance. You know, we could be moving simply toward the area up there. All right. I know the MACD's crossed down because we had four weeks down, but nothing's really changed on the dollar yen, is it? US is raising interest rates. Japan's not raising interest rates. So there's that carry trade perspective all the time on the dollar yen. All right, borrow yen to buy US dollars. All right, barely any interest rate on the yen side, and then you get the carry on the US dollar side. So this could just stay range bound, of course, come up to the top and just stay range bound. But structurally, weekly chart trend is remaining up. Excuse me a moment. And the day chart structure here is clearly up. Now, we may be a little bit overrun in the short term, but if we are overrunning, it needs a pullback. You know, where's the logical level for this to pull back? Logical level to pull back to is this area of day support, monthly support, 135.56 down to 135.16. All right. Intraday, I've been watching this intraday. All we've done today is this is yesterday's candle up to the new high of today. All we've done is pull back to the 62% level and started to consolidate. This is then potentially the market collecting orders to move up. So we may well come up to re-challenge the high that we formed today. You know, at the moment, intraday, this is not breaking down. It's holding at the 62% retracement. It's holding above 137. As I'm talking, it's putting in another bullish candle. So we're not able to have a day down yet. So whilst it's looking a little maybe heavy up there, you know, one or 2 days down doesn't change that trend. So I'd maybe anticipate maybe a 1 day down somewhere. But say we're having a negative candle today. See this run up here. We had a negative candle, and then we had 1, 2, 3, 4, 5, 6, 7, 8 more days up. All right. So intraday, I'm not seeing any negativity when I'm looking at that 15-minute price structure. All right. I know it's slightly negative on the day, but for me, it is high up. I wouldn't be buying up there. I'd much prefer to be a buyer if it pulled back to here. So I'd be monitoring for a pullback, right? You know, the market doesn't always give me what I want. This could go up for another 3 or 4 days without a pullback. And you could have bought today and you could have still made profit, but it is quite high up there. So like I was saying on the other pairs that are quite low down, you know, being a wise trader, look to be, be a buyer at a discount price, a seller, at a high price. That should be your philosophy. And at the moment, pairs to the US dollar, well, this is dollar to the yen. This is at a high price at the moment. It's more discount down at support. All right. So you have to work out yourself whether you want to engage right now or you're going to be prepared to wait for a pullback. All right, so let's have one more look at a pair or instrument. Let's have a look at gold. This is just following the overall, let's take that off. The overall structure of the pairs to the dollar. It's weekly trends down, it's rallied back to the 62 level. Folks broke weekly resistance. If nothing changes structurally on the day chart now, this is potentially just moving back down to support to challenge a break. It's not moving down as aggressively as the pairs to the US dollar, like the euro dollar, the pound dollar, but it is on the day chart. It's moved through the lower bottom, so it would be great if it could rally back up, like I've been asking for the US pairs to the US dollar. Can we rally back up to resistance, which is 1786.74, and offer the opportunity to trade down? All right. Now, that would be the optimal level. We could, now that we've broken below 1754, maybe all we can rally back up to is that level. So 2 levels to watch. Broken day support, 1754. Do we rally back up to that level, hold and fail? Or do we rally back up to 1786? All right. All right. Any questions here? Slav, you're saying euro yen may still be in a downtrend to test last week's bottom, 134.94. Well, it may be. Thing I'm seeing on the euro yen at the moment is it's mixed. Let's get rid of my lines here. We have a higher bottom and a lower top. Now, the thing that I've been looking at to base a decision about, do I want to go long or short, is on the weekly chart, we've come down and rejected monthly support here. Then we came back up, had a drop down. Last week, we heavily rejected and went back up. So if we have a week up this week, this is going to start to form a higher bottom on the weekly chart, which is positive. So all I'm seeing at the moment is we're just pulling back inside last week's candle. And I'm seeing on the day chart that we've got a lower top, higher bottom, which is kind of mixed. So it's not that easy on the euro yen at the moment to determine what is going on. So Slav, you're asking me from your perspective, closing your trade from last week. Well, are you long or are you short? It doesn't really matter where you're long or you're short, because you have to make your decision yourself. But you can tell me you're short. If you're short, and last week we were looking at the possibility of this 79% retracement up here. If you got short up at the 79% level, what you need to do as a trader yourself is, if you got in because you thought, okay, there's a 79% level here, I'm trading that level to trade down to support or the 127 extension. Then if you trade at the 127 level at the moment, sorry, if you trade at the 79% level last week, you're in profit. So what you should be doing is trading it as you thought things were going to run out when you took the trade. All right. Irrespective of what I'm seeing or what I'm saying, because I might have a different perspective. And my perspective won't necessarily be what the market does. It's just my perspective. Okay. So last week, yes, I was looking potentially for the 79% failure up here, which, it did. But if we just forget about Tuesday's trading, Monday's trading, come Friday, we were kind of positive. And when I look at the weekly candle from my perspective, I thought, okay, that looks rather bullish. So as I didn't sell it up there, I didn't have to then think about should I be long or short. I'm just making a reassessment of things for myself and thinking to myself, well, where do I think the longer term perspective is for myself? So on and so forth. But for you, if you set this trade up to sell at 79 on the basis that we're trading down to support or down to the 127 extension, you should just trade that philosophy. I know Nathan, I think he's short from up there as well. All right. Whereas I've had a relook at it and I'm thinking to myself, maybe the bias is the other way. Okay. Who's going to be right? The market's going to be right. And then one of us perspective will be in line with the market. All right. So if you have traded down from the 79, you should have that trade managed to at least break even by now. Of course, your concern right now is, so it's dropped down the 4-hour chart, is will it get down here? So, you know, you have to maybe start to look at, well, how can you lock in profit if you're in a trade? And what will tell you, okay, that things aren't working anymore? Going to my 1-hour chart. I just want to put a line across. There's a little bit of a lower top there on the 4-hour chart, which is that 1-hour top there. So there's a minor 4-hour top here. See how we've been making these lower tops on the way down. As long as we're making lower tops on the way down there, Slav, you're correct. So what you could be doing is then, as the market makes a lower top, just put your stop 1 pip plus a spread above the high. As long as we're not taking out a high and changing the trend intra-week, you're still right, aren't you? But if we do trade above an intraday high, well, that should be telling you then that maybe we're not getting down to support here. Maybe intra-week we're changing trend. All right, so at the moment you're on the right side because it is still making lower tops and bottoms. I'm looking at a different perspective of the weekly candle was very positive last week. Are we trading inside that weekly candle to find support to move up this week? All right. So just because you've traded at 79 in profit, that's great. It could meet support, it could move through, or, you know, it fails to get down there, but you're still be able to take profit from trading up here at the 79% level. All that's happened is, you know, you're trading at a 79% level up here. It just doesn't meet your intended target. So just manage it effectively and take as much profit out as you can. All right, so we can review it in the week. Now, potentially, you could still be right. And this is moving down long term. Now, my analysis before was on my other charts. I was looking at, you know, is this a left shoulder head, right shoulder inverse? That's last week's candle. I was looking at the fact that we rejected down here at 79. So like you were trading the 79 down last week, we almost got down to that 79% level there of the candle this week. So sometimes what happens when the market's rather range bound is it'll move up and fail at a 79% level that you can put in. And then when it moves down the other way, it's rather range bound still, then it fails at the 79% level at the other side. And you don't meet the full target and things get a little bit range bound. So it's all about perspective. And I don't know whether I'm going to be right or you're going to be right. All I'm really doing, if I open up a fresh chart on the, I'm looking at these yen pairs, like the Aussie yen. Which is showing a bullish monthly candle. Dollar yen's moving up. Just want to chart that. Get my right template. I want that one. All right, here's the monthly chart. Where's the trend, guys and girls? Where's the trend on the monthly? Now, I know we've been trading down today as well, but yesterday, and certainly at the close of Friday, so you're saying up slab, at the close of Friday, that candle looked a lot more bullish than it's looking at the moment. It's still positive though. It's still higher top, higher bottom. We've pulled back to an area of monthly supports. And, you know, this could be the bottom for a further move up. So when I'm looking at that, and when I was looking at on Friday with a very positive, much more positive monthly candle, because we're having 1.5 kind of days down, I'm thinking, okay, are we actually putting in a positive month for this month to move up next month? All right. Now, of course, things can change very quickly over the course of a trading week. The weekly trend is actually down at the moment because of the movement down that we've been having in the month. But I'm just studying this blue candle here. We've got one rejection here. This rejection here, if I drop it down to the daily, is in between the 62 and the 79. So potentially, you know, if that bullish week last week is putting in a low here between 62 and 79, then potentially we might be going like so. It's very hard to understand which way we're going at the moment because, as I've said, the last top and bottom are not telling the trend on the day chart because we have a higher bottom than a lower top. So it is a bit mixed. But all I'm doing at the moment is going from the monthly to the weekly and thinking to myself, if I'm trying to position myself for a trade that I might want to hold for 2 or 3 weeks, where is the longer term trend? Well, the longer term trend's up. All right. So what I'm trying to look at is, okay, if that's going to stay in play and it's going to unfold next month, you know, if we have a positive month this month to move up for a positive month next month, then as I was showing you before, that's how I'm structuring my analysis this week. As well, this rejection down today stopped short of last month's low. Now we moved below last month's low. We came back above, it became support here. We kind of went below it a fraction, came back up last week. This week, we're not wanting to move below last month's low. So I'm just seeing some things that maybe are more to the positive side rather than the negative side, but ultimately price will be right. Okay, so all I can say to you, Slav, is trade the trade out like it set up for you last week. Obviously lock in some profit as price moves. And yesterday's rejection is because of the news from the EU. But, you know, don't forget the euro dollar is below parity. Maybe there's lots of traders below parity buying the hell out of it because they think that price won't stay below parity for too long. And they want to push it back up to, say, 103.40 or beyond. Now, if that happens, then, of course, the rejection we're seeing as well today on the euro yen this could be the impetus now for, you know, that move up. Of course, you don't want that because you're short. I don't really have too much of a bias because I'm still waiting to see if it can show its hand to the upside. So I'm neither, you know, I'm not short from the top, so I'm not wanting anybody to tell me that it's going to go long. So just manage your trade now. The market's either going to show you profit the way you're anticipating, or you manage it and lock it as much profit as you can as it moves down. All right. You know, there's never sometimes it's very clear. Sometimes, you know, it's not. I traded the Aussie yen last week based around, you know, that 79% here. I also traded it based around the possibility of a head and shoulder pattern forming. Left shoulder, head, move down. I sold it there with the possibility of a right shoulder forming. And then it moved up. So there's never a guarantee that it's going to actually go with your analysis that you're seeing. You just have to manage it the best you can. And at the moment, if I'm being perfectly honest, Intraday at the moment, I'm not really sure which way that's going. I think on the day chart, it's potentially holding to a higher bottom here, but when I look at it intraday, structurally it's just up, but it's still failing over here at this 79% level, still holding there. In 2 or 3 weeks time, we could just be consolidating here for a long-term move down. We'll just have to wait and see. So all you can do is use the tools, make a decision if you want to trade, and then manage that trade effectively. Like I said, when we went through the 79% fib retracement pattern, and one of my colleagues that I've been teaching at work, he's telling me today, he's traded the pound long today with a risk reward of 1 to 3. He goes, I don't care if it doesn't work because I'm only going to lose 1, and I just made 3 on my last trade. So it's all about creating great risk to reward, structuring it around patterns that work in the market, and then the market's either going to be very favorable for you, or it might be less favorable. You can manage your trade to break even and lock something in, or of course not be favorable at all and you have a losing trade. All right, so sometimes the market will work exceptionally well. It worked exceptionally well for me over the last couple of weeks on the euro dollar, Aussie dollar, and pound dollar. But sometimes it doesn't work exceptionally for me either. Then my trade on the Aussie yen last week, I was up 100 pips at one point and made about 20. All right, I was targeting 200 to 300 pips down the track, but didn't have a loss, made a little bit of money, but it was annoying. Everything, those things annoy me too. All right, everybody, before I get off my soapbox, just what's coming up through the week. Tomorrow I'm going to go through mastering the double top and double bottom pattern. The patterns that I've been showing you over the last 3 weeks, we've got another one next week. It's all about structuring trades that offer you great risk to reward. Being a profitable trader isn't being an exceptionally skilled trader that can be right every time. It's about structuring great risk reward. All right, you can structure risk reward on a double top. Risk reward targets greater than 1 to 7. Okay, quite easily. So you need to add that to your arsenal for sure, because that's where through the course of a 12-month trading in a year, trading the major patterns that offer you great risk reward, that's where you're going to make your money. I've had a good month this month, but ultimately it was just trading really one simple pattern on 3 pairs. And you can go and study this. Let me just finish off. Aussie dollar, really what we saw, and maybe the move hasn't run out yet, but really what we saw was almost got to the 79% level, and it came back and failed at resistance up here at the 7100 level. And to me, that looked like a solid area to look to short it for a potential move back down to support. All right, so I was just trading in kind of a fib structure environment, close to 79. Euro dollar, I just traded 62% level at monthly resistance up here. I have to wait for that to come in for a good 2 or 3 weeks, and a very similar setup on the pound dollar. All right, nothing too much intraday I was doing. Waiting for this to come up and fail at the 62, got a fraction short, then it came down, rallied up to a 79% level on a smaller time frame, got short, and just anticipated it's going to move down to support. All right, now I could have been wrong on all 3 of those trades, but I was just trading a pattern that repeats, in general terms, and favorably for me, they repeated. All right, so that's all I'm doing, is just looking at the larger time frame patterns. I might be dropping down to a lower time frame to get in, but trying to structure great risk to reward. That's all I'm doing, generally speaking, in line with the trend. All right, everybody. All right, so you got some levels I'm watching. A bit low down at the moment on a lot of the pairs to the US dollar, looking for a rally. So whilst I'm waiting for a rally, why don't you come join me tomorrow at the double top, double bottom pattern webinar, learn some more skills, waiting for the next trade setup. Okay. All right, everybody, any final questions before I go? Slav, good night to you. Hopefully your trade works out more profitably than it's doing at the moment, but you're making profit, so that's great. So Parbeck, thank you. Thanks, Cameron. Thanks, everybody.